Alright guys, another W today on NQ, 5th of August 2024. Trade breakdown and charting session that I wanted to share with you guys. I took this trade on the 1 minute time frame. It was a classic turtle soup manipulation liquidity sweep targeting equal highs. So I entered just after 9:30, as you can see here. It's 9:30 open. I entered at 9:31. Before that, liquidity has been swept on the sell side, liquidity here, and I took off my trade at the equal highs over here. So we've got buy side liquidity sitting here at 1.23, making them equal highs. And during the trade as well, bullish order block was put in, further confirming that price is eventually going to reach for these equal highs over here. So I'm going to take you guys through my thought process, my analysis from the high time frame bias, and what made me took this trade. So let me take away the drawings and also the replay. So we can see here on the daily time frame, there was actually a big price move last night. There was a bloodbath. Last night actually Nasdaq moved around just under 7%. At the moment it's sort of hovering here, just within the previous daily candle last night, and I'm still looking for price to potentially target the daily sell side liquidity here. So what made me took this trade was I was doing my analysis at around 8:30 open, as you guys know. I don't take my trades at 8:30. That gives me enough time to analyze the market around then, and only take my trades at 9:30, which is what I like to do. So I'll hop over to ES. Okay. We can see here ES, a couple of things that was put in. We can see bearish momentum here. We've also got sell side liquidity sitting there and there, but we're not interested in that. We're looking at the price action last night. So we can see on a daily time frame there was a volume imbalance here, and also another one here. So volume imbalance is a little bit different to fair value gap. It's a gap as well, but it hasn't been traded into. So there's no there was no prices that filled these particular voids here. So that's what we call volume imbalance. Hopping over to the 1 hour time frame. And I'm going to bring back NQ as well, just to give a comparison. Now this is what I call SMT Divergence. I use it to add confluence to my trade and give me a little bit more confidence on knowing what price wants to do and where price is going. Now we can see here identically at 1 a.m. New York time, you can see that where my cursor is, there was a down close candle on ES at 1 o'clock, and at 8 o'clock in the morning ES actually made a lower low, while NQ did not manage to penetrate this candle here. When I say this candle, I mean this one, this green line here. Let's take away that sell side liquidity for now, just to make things clearer. So NQ made a lower low, as we can see. Where else ES made a lower low, and NQ basically did not pierce through or purge through that liquidity level. So when I see a move like this, so what you can do is you just type in SMT. That means SMT Divergence. What SMT Divergence means is that you can use this as confluence to frame your trade. So for example, if sell side liquidity is taken on one particular instrument and the other one hasn't, NQ in this case would be considered the stronger instrument that will potentially target buy side liquidity because sell side has been taken. Potentially once any sort of level has been swept, smart money will be targeting the opposite side. So for example, in this case for ES, SMT has been put in here and there. So we can safely say that price will potentially target buy side liquidity here. So just let me take this away so you can see that liquidity has been swept, right? And you will know it's a liquidity sweep because price rushed down, swept liquidity, and immediately went back up. There was no dilly-dallying around here. There was no candles that were wicking. There were no indecisive candles. Displacement happened pretty much right towards the upside. And we can also see that there is also one more confluence that's in play, that you see these daily volume balance in orange bars that we put in. Price respected that level and went back up. So I was actually monitoring this on the 1 minute time frame. So let's go to ES at 1 minute and NQ at 1 minute. On ES, right, you can see I've got my indicators here. I'm just going to enlarge the chart a little bit. And let me take away these drawings. So on ES, let's focus on ES for this moment. We can see at 8:30 open, price purge short-term sell side liquidity here, displacing upwards, putting in a market structure shift. So when I see this happening, I was still monitoring this. No trades were taken before 9:30. I saw this huge displacement going towards the upside. Now, when I see a huge displacement being put in like this, where do you think price will want to run towards? If I was to take away the bar, if I was to take this away. So now that price has displaced towards the upside, where do you think price wants to go? Do you think with this bullish upward move, price will look to take these levels here, sell side liquidity here? No. It would want to target these levels here, these buy side levels. All the buy stops that are targeted and placed here, that's where the smart money will go. And this is also referred to as low resistance liquidity run, where I've mentioned many times before, smart money will generate liquidity and make jagged moves like that to trick retail buyers to run them potentially in the near future. So if we play this forward, you can see price eventually run all this buy side liquidity. So now that I know that price, like I said, I mentioned before, was heading towards the bullish side because of the SMT divergence, we can use the same framing of price analysis for NQ. So even on the 1 hour chart for NQ, now that we know that there's an SMT here, we know that price is moving towards the bullish side. So for me, I would maintain a bullish bias. So jumping down back to the 1 hour chart, we can see this has already happened. Obviously, hindsight is easier to explain. But as you can see here, right to what I said in regards to price maintaining a bullish bias and attacking that low resistance liquidity run, price actually went up here and took buy side liquidity on the 1 hour time frame. And on the 15 minute, it makes it even clearer that you can see more jagged moves here with that low resistance liquidity run like I mentioned. So because the market was really choppy lately, you don't have to have such a high target of aiming that level here, which I put in as a buy side liquidity. If you're trading on the 1 minute time frame, like I did, Like, you don't have to be greedy and try to get as, like over 100 points or 200 points. You don't have to do that to be a profitable trader. You can just target your lowest hanging fruit. So like I said before, if I'm just gonna make this, just gonna make this about NQ now. Now we know that the bias is bullish. So like I said, this buy side liquidity here was a 1 hour buy side liquidity, which you can see price eventually went to, right? But here, if you're trading a 1 minute time frame, you can even sharpen your trades. And I never trade unless there's a raid on liquidity, because that's how smart money moves. Remember, like I said many times, if price was to travel towards the buy side, so for example, this is the buy side. If price was to travel towards the buy side, before price goes up and take that, price will actually go down first. So imagine this was the target, so price would actually move like that, raid liquidity before traveling upwards, right? And if let's say this is your sell side liquidity, how would price move? Price would actually move, accumulate, manipulate all the buy stops above that buy side liquidity here before traveling downwards. Okay, so this is a classic liquidity sweep targeting equal highs, like I said. So we can see here 9:30 open. Straight away you can see what smart money did. Manipulate price, sweeping sell stops. And what happened next? Before that sweep, it's no coincidence that smart money put in equal highs here. They put in equal highs here to generate more liquidity, to generate more buy stops that retail traders put in. And this is not by coincidence. They engineer this liquidity to run it in the future. So I opened up my trade at 9:31 and I pretty much closed it at 9:34. So there was a 3-minute trade. And you can see here, I actually opened it. I didn't even wait for this. I didn't even wait for this order block to form before I trade, because I already knew in my head and in my analysis that my high time frame bias was already bullish, because I've established SMT with ES. I've established that ES has respected its daily volume imbalance. It has made a market structure shift on a 1 minute time frame, and so we can assume that on NQ, because these instruments are potentially in sync, we can also use that same bullish bias and bring it across to the instrument that I'm trading, which is NQ. So I know that I put it on micros here, but I actually traded on NQ, so don't worry about it. The price is actually the same. So basically, I opened up my trade at around, it wasn't 9:31 actually, it was around, yeah, it was 9:31. I did not even wait for this order block to form, because I knew that this was a buy bias, like I said, and I noticed that this is a little bit advanced, but I'll explain to you guys. You can see with this bearish candle here, the following candle actually closed inside of this bearish candle, meaning that is a signal of a potential reversal in price. So if this candle was to close, let's say down here, then I would say, price can potentially be still bearish, and perhaps they're targeting sell side liquidity here before going upwards. But look, price is also already in a discount in terms of the Fibonacci retracement, so it's prime for a long. So that's what I did. As you can see, like I said, eventually price reached here, but you don't have to target so high, guys. You don't have to target so high. So even if I put, like, I entered my trade here, stop loss was underneath this. Like, why was I confident that price will not go below this? Because price has already manipulated. and swept this level, right? So, and this is all data driven. I've back tested it. I've traded this model many times, so I'm confident in my trade. So it was a almost 1 to 3 risk to reward ratio. I was just targeting this high. I mean, I could have made significantly more here, but it was just a scalp that I'm happy with. 1 to 3 is more than good enough. And look, you could have targeted here, you could have targeted here, targeted here. It's all up to you, but all I'm saying is that if you're scalping on a 1 minute time frame, it gives you plenty of opportunities. But I normally only will enter if there is a raid, because it's a model that I've used consistently and it's proven to work for me. So that's what I've used since I've started with all the trades that I take. So I hope that this video was helpful. The breakdown was helpful. I know it was a little bit all over the place, but the essential thing is that you guys understand how to read price. And look, I come into the market, if there isn't an opportunity for me to trade, I don't trade. But by monitoring on the lower time frame and understanding where your high time frame bias is going, it helps you frame your narrative and it gives you confidence to actually put in a trade, and also practice good risk management, which is essential. So that's enough for today, and I hope you guys have a good trading week. It's a win for me on a Monday, so let's hopefully keep this streak going, and I'll catch you guys in the next one.